Good afternoon, everyone. Can you hear me okay? Great. Thank you very much for coming. Welcome to this session on leveraging carbon markets for Africa's green transition. My name is JULIET MUNRO. I'm the Director of Digital Innovation at FSD Africa. We're a specialist financial sector development agency funded primarily by the UK government through FCDO. We are headquartered in Kenya, but we have reach across Africa. And we work in close partnership with our sister organisation, FSD Africa Investments. So we work very much hand in hand. And our mandate really is to focus on making finance work for Africa's sustainable future. And we've built up a wide-ranging portfolio of partnerships, investments, and projects that help us to achieve and contribute to that agenda. So I think during the course of this afternoon, we're going to be focusing on a number of different areas that we're interested in as FSD Africa, including finance for nature, finance for climate adaptation and resilience. And in this particular session for the next 45 minutes, we want to focus on finance for carbon markets. All of these areas are interrelated, of course. We see this as a growing area of interest to us and is an area where we have started to invest quite a bit, including through the organisations that are represented on the panel today. So we'll talk about that in a little bit later. But why carbon markets? Well, we see it really as a core tool that, if developed well, can contribute significant revenue, job creation, transition of economies, and support to people and businesses for Africa and for the green transition, but also, importantly, through Africa's active participation in carbon markets, it can contribute to solving the global climate and biodiversity crisis that we all face. Obviously, we recognise that they are complex markets. They are heterogeneous. They are rapidly evolving. They require deep expertise. They require a long-term view. And this makes it difficult. They're not easy markets to engage in and to invest in. And they're not without controversy. I mean, we see increasing exposés about issues that bring quality to the fore and market integrity to the fore. And perhaps understandably, they cause investors to hesitate when it comes to investing. So we need to be alive to these issues. We need to understand these issues and tackle them head on. But nevertheless, what we don't want to do is lose sight of the big prize and the significant opportunity that carbon markets can present to Africa and to the rest of the world. And really, that's the purpose of this session today. And that's the purpose of having this esteemed panel that I have today, who I would like to introduce. Firstly, I'd like to introduce James MWANGI, who's closest to me. James, if you know him, he wears many hats, and I'm not going to talk about all of them. I'm just going to focus on two. Firstly, he is co-founder and CEO of Africa Climate Ventures, and we'll hear more about ACV shortly. And secondly, he is founder of CAPE, Climate Action Platform for Africa, which I describe, I don't know correctly or not, James, as a think and do tank that's really helping to unlock Africa's potential to transform its economies and to really take a leading role in driving climate action. So welcome, James.
Thank you.
And to his left, we have Martin FREIMÜLLER, who is an entrepreneur. And he is the co-founder of a startup called Octavia Carbon. And again, we'll hear more about Octavia Carbon shortly. So welcome, both of you. And perhaps I can join you in the middle of our rather vacuous, large panel. So James, I really want to start with you. And you're a sort of a thought leader in this space, not just carbon, but climate action more broadly. And I really want you to help us paint a broader picture here. So obviously, you know, from a global perspective, things are looking pretty bleak. I mean, I read this week the UNFCCC's latest publication on progress towards the Paris Agreement goals, which was published last month. And it really talked about the fact that we are falling far short of meeting those targets. We have to exponentially increase our action and our implementation in order to meet those goals and not enter into areas where we're going to start to achieve other tipping points. And it talked about the need for sort of wide-ranging systems mainstreaming transformation that's required in order to achieve that. So we've got quite a sort of bleak picture ahead of us. But on a more positive note, we recently concluded the Africa Climate Summit in Kenya last month, which was hosted by President Ruto. And I think that brought to the table quite a positive narrative around the opportunity, the fact that Africa is open for business, open for climate business, and that Africa can be part of this solution in a significant way. So I think, you know, that gives us a sort of a big perspective, and I think taking that big picture in mind, James, why do you see carbon as a significant opportunity for Africa?
Thanks, Juliet, and thanks for just really putting clarity around the challenge at hand. We are in trouble if you're thinking about the world from a climate perspective. We are still emitting way more than we should be. We're cutting way slower than we should. We need to expand carbon sinks way faster than we are. And that's starting to show up in various places. The thing is, it's not surprising that we are in this position because we haven't finished our homework. At the Paris Agreement, all the countries said, guided by science, we need to get to net zero by 2050. One group of countries said we'll get there by 2050 and we'll start to plan for doing that. Most of those countries are currently well off track to deliver on their promises. They are way behind track. A second group of countries said we can't get there. There's just no way we can get there because our economies, we're raising tens, hundreds of millions of people out of poverty, and to do that we have built our economies on fossil fuels. And at best we'll get to net zero by 2060, 2070, etc. Now remember, net zero by 2050 isn't some arbitrarily imposed number. To some extent it's arbitrary in the sense that we drew a line there, we like round numbers and so on. But the underlying science of it is really clear about tipping points and the probability of us hitting really difficult tipping points, some of which, or most of which, will be felt most heavily in Africa. So anyone who says Africa shouldn't worry about net zero by 2050, we need to be clear that that drag, and it's taking about 5% of GDP growth every year, it's a 5% tax on Africa's growth every year, that drag is only going to get worse as we go along if we don't address it. It's a fundamental economic issue. So why do I say that we didn't finish our homework? Because if you're given a maths problem that says these countries' outcomes need to sum to zero, right? And one set of countries has promised to get there but won't quite get there, so they won't be at zero, there'll be some extra carbon. Another group of countries isn't even planning to get there, that's another extra stack of carbon. Anyone who studied primary school maths, what group of countries are you missing? You need a third group which gets to zero but keeps on going, that removes more than they're emitting. Mathematically, for the world to be on track for anything other than true climate catastrophe, some group of countries somewhere in the world need to spend the time between now and 2050 building economies that actually add more to the carbon budget of the world than they take out. And that's why we need carbon markets, because we need ways of rewarding what is essentially the most important service any country can export to the world right now. It's the most important public good we can have is greenhouse gas headroom. And carbon markets, once they're, the way I think about them is not about, voluntary markets, offsets, and so on. It is simply saying those who emit more than their fair share should pay for doing that, and those who do the work of removing or avoiding emissions should be paid for that work. If we get that simple transaction to work, call it what you want, call it a tax, call it a market, call it what you want. If we can get that mechanism to work, it creates the jobs and the economic dynamism that our continent needs in order to leapfrog into middle income status and beyond.
So we've got, this is an investment conference, and so we have investors in the room, and so I want you to sort of say something more about how this translates into an investment opportunity. What the Africa offer is then to the investment community, and if you can say anything about the scale of that offer and the opportunity.
Yeah, so I think that the opportunities, in my mind, fall into three categories. And the first thing to keep in mind as an investor is Africa, in this particular instance, is not just as interesting or almost as interesting as doing the same thing anywhere else in the world. It actually has, for pretty fundamental reasons, more running room, more headroom, more opportunity than almost any place else in the world, right? And those three pathways, as I define them, are firstly, green growth more broadly defined, or greening Africa's own consumption and production. It's that process of leapfrogging from high-emitting technologies, or even avoiding high-emitting technologies, and going straight into the technologies of the future, whether it's in renewable energy, e-mobility, clean cooking, and so on and so forth. Historically, there have been substantial, I guess Bill Gates called them green premia, associated with these leapfrogs. These things were more expensive. The Tesla was more expensive than the BMW, by far, right? But that's changing. And if you follow the curves on everything from photovoltaics to battery cells to a range of other solutions, you can see that the cheaper solution increasingly sits on that side. So there's one aspect of this that's just how are we delivering these leapfrog solutions in Africa? I would add a note there that we need to keep in mind that some of them will work better in Africa than anywhere else in the world. It's an act of somewhat, to have more solar panels in Germany than Ghana suggests that the human race doesn't know where to allocate its scarce resources. If we want energy, put our energy generating capacity where we have the energy available. So that's the first category, greening Africa's own value chains. And in that, carbon credits can play a role in areas such as clean cooking. We are invested at Africa Climate Ventures. We're co-invested with Cocoa Networks, one of the most successful clean cooking companies in the world. And we are launching together with them Cocoa Networks Rwanda. They're generating something like 5 tons of carbon credits per household per year with every stove that they sell, because they have that clear proof of both the quality of the stove and the actual usage, and can bring that to the markets with clarity. So that's the first one. The second area is Africa's green competitiveness. This is not necessarily a carbon credit story. It is a value of carbon story. With the rise of the carbon border adjustment and other mechanisms that actually begin to assess and compare products based on how much emissions were incurred in producing them, you will start to see a push to do more in places with a low emissions profile. The examples I typically use, well, everyone's aware that there's a little bit of a gold rush for green hydrogen in Africa right now. Namibia, Mauritania, Kenya with its green ammonia fertilizer play, and a few others. I think we omit that there are even bigger opportunities. I'll give one just concrete one for you sitting around the table. Africa exports about 25% of the world's bauxite used to make aluminum. If that bauxite was processed using renewable energy in Africa, using the ample solar and wind and hydro resources that exist on the west coast of Africa, just that one change, no change in technologies, no change in anything else. We've moved aluminum smelters around the world in the past. It's not a new thing that we'd be doing. That one change would reduce global industrial emissions by 1% instantly. Now repeat that across every heavy energy-intensive raw material that Africa exports, and you suddenly have a really interesting story if you're interested in greening mineral supply chains. And that translates into billions of dollars of investment and a new thesis around how you drive industrialization, where the raw materials are, where the untapped energy is, and where the labor force is. So that's the second category, producing for the world. Basically right now, Africa is less than 4% of global manufacturing. You can assume that every single point increase in that share is a similar single point decrease in global emissions intensity, just because of what you'd be doing and how you'd be doing it. The third area, we're not yet investing in that one. That's heavy. We're looking at some stuff in hydrogen and particularly green shipping fuels and what role can we play in catalyzing those spaces. But those are big ticket investments. So it's a different category of investor. And in the third category is just recognize the fact that we're going to emit more CO2 into the atmosphere than we were allotted in our budget. And we're going to spend a good chunk of the remainder of this century pulling it out of the atmosphere as quickly as we can to get back to something that feels like a stable climate. And that means not just protecting our natural land sinks, but carbon sinks, but expanding them. Reforestation, forest protection, mangrove protection, grassland protection. All of that stuff that is really in the core of what carbon markets have traditionally paid for, but done at a level of rigor, a level of scientific focus that actually makes this a viable area of job creation is one thing. But there's other things as well. There is how we manage soil carbon with farmers. We are invested or we're looking to invest in a company that's doing organic fertilizer with a very high durable carbon removal content. You're benefiting both by starting to displace expensive imported chemical fertilizer, and at the same time, you're increasing farmers' ability to earn revenue from durable carbon removal credits for biochar, which is very different in terms of pricing from the typical $5 to $15 a ton. You're talking really, $90 to $150 a ton for the right solution there. So suddenly you're saying the farmers are not just improving their soil, they're actually delivering a climate benefit as one of their jobs. And the last thing, and it's a perfect segue, is science will be a huge chunk of this. We will need to have engineered solutions for carbon removal because nature is going to top out at a certain point. The amount of carbon we need to remove between now and the end of the century cannot be done just by forestry and plant matter. For one reason, organic matter burns. And we're seeing it burn in a lot of different places right now. So we're in that feedback loop that means we're going to need to do other things. Among those things is direct air capture, and there we are excited to see an ecosystem starting to form in Kenya. Martin will talk about the amazing work they're doing at Octavia. Through one of our companies, Great Carbon Valley, we're actually hosting what will be the first large-scale industrial direct air capture plant in the Southern Hemisphere, or in the global South. But taking advantage of the fact that East Africa in particular has a huge global competitive and comparative advantage in direct air capture and permanent carbon removal because of our energy endowment, because of our subterranean assets, and because of the fact that we don't emit that much from our grid anyway, so there's not much to decarbonize elsewhere. So those are the three types of opportunities. In each one, it takes some imagination and really thinking about what the future brings. But if you believe that we are going to have a stable climate in 2050, then you have to believe that Africa is going to play a huge role in that, and that creates massive and patently visible investment opportunities today. I went on a bit too long, but thank you.
I mean, I feel like we've already ended the panel in a way. So I mean, basically you're painting a picture of significant potential and significant contribution from Africa to the global problem, as well as to solving for Africa and the green transition. But as I said at the beginning, there are major headwinds here. It's complex. Carbon markets require stable, enabling regulation. And yet we know that there are significant pockets of political instability. There's uncertainty around some of the regulation that's appearing in certain markets. It requires high-quality carbon credits for the rest of the globe to take notice. And yet we're seeing these problems that bring, market integrity into the conversation and raise questions in our minds as investors. There's significant transaction costs in creating feasibility for projects, generating carbon credits. It requires a lot of long-term capital, so patient capital is important. And there's the issue of price. I mean, you talked about the sort of voluntary and carbon markets and stuff, but we know that the voluntary markets command a much lower price than the compliance markets, and that's an issue for Africa. So with those kind of headwinds in mind, what's your message to the investors in this room and in this conference? I mean, how do you factor those headwinds into your investment decision-making equation?
So the first thing I'll say is, of course, any seasoned investor will list each one of those headwinds and see it as an investment opportunity, because essentially what you're seeing is a market whose market infrastructure hasn't been fully built yet. And that means that, so for example, buyers aren't sure what they're buying, sellers aren't sure what they're selling, and thus everyone agrees that we'll make the price low enough that no one is really, hurt if it ends up being worthless. And over time, bad stuff crowds out good, because doing things well costs more. And so you have what we have now, which is every couple of weeks, The Guardian finds that another project at a pitifully low carbon price did not deliver any of the benefits it promised. It was cheaper to tell a good story and flog the project off at a very low price and bank the margin than it would have been to actually build a high quality project, get a real, charge the price it costs to do that, and so on and so forth. My sense is, in some ways, that dynamic in the voluntary markets probably just nudges us closer to where I think we'll eventually end up. Some may disagree, But a lot of the most successful carbon projects I've seen have at least had a toe in the compliance markets, where there is a regulator, there is some degree of greater rigor, there is that expectation that there is some recourse in case some of these things don't work out. And I think with the Paris Agreement, with Article 6 and Article 6.2, I'm not going to get into the details of this, the regulatory architecture for a global compliance market in carbon is starting to take shape. People have been saying that for a very long time, I think, but it is progressing, and I think a lot of the key building blocks are in place. I think that what that means is, firstly, we need to be asking ourselves as we look at carbon opportunities, A, are these resilient to the expectations of a compliance market buyer? Even if you're not selling to a compliance market buyer, you can expect that the standards will converge towards what convergent compliance markets buyers are looking for. So are they resilient to that? For governments regulating the space, the same question applies. Are you setting up a space that makes you an attractive compliance market player? And then over time, have we put in place the conditions that allow the price of carbon in various compliance markets to hopefully converge over time, right? A rational market should see us treating this molecule that's a true public bad exactly the same everywhere, similar price. With those things in place, you still need to figure out data, right? You still need to figure out how do you prove that you're actually doing the thing you say you're doing. There have been too many cases of hand out some t-shirts, do a big event, have a pile of cook stoves in the corner and declare victory, and not actually saying, can we see that we are having an effect on the underlying carbon stocks that we are targeting? And that takes work, that takes technology, that takes innovation. There are dozens, literally dozens of companies focusing on this space. My expectation is that it'll increasingly be a solved area. And once you have that clarity, you have clarity on the price, you have clarity on the product, you then need a way to transmit that incentive. Is it through cash payments to the people doing the work in the communities? Is it through subsidizing products like clean cook stoves, like solar water, irrigation, like biodigesters for farms, so the benefit actually comes in lower prices? Or is it through some other mechanism? But as I said, in each of these pieces, there's a huge pool of potential value to be had, but it's not as simple as, well, grab the first carbon project you see. And I can see some people here who are practitioners in the market who know that only too well. But at the same time, I do think that there's good news in the fact that all of these hard questions are being asked of the market today. Because it does mean that as we saw with pets.com and all of that, you get all the rubbish out and now you build for real. Like, what does this market really need to look like if it is to be transformative over the next 20 or 30 years?
Yeah, it's like a natural transition in a way that the markets go through. I'd like to switch gears a little bit now and turn to you, Martin. Martin, you are an entrepreneur based in Kenya. You've weighed up the opportunity and the related risks, and you've decided to take the plunge. You were recently cited in The Economist as leading the way in direct air carbon capture, taking advantage of Kenya's natural assets, including the Africa Rift Valley. I'd like you just to say a little bit about Octavia Carbon, just very briefly, including the problem that you're solving for.
Yeah, thank you so much, Juliet. And in many ways, the problem that we're solving for is perfectly described by James. It's too much carbon in the atmosphere. And essentially, what we do at Octavia is we design and build technology that filters that CO2 directly from the atmosphere to turn it into rock underground, thereby reversing climate change and enabling carbon negative growth for the African continent. We are, as of today, in a small industry that is still direct air capture, has just about 1,000 people working globally. We are the 4th largest player with about 45 people. We are building the world's 2nd largest project in the Kenyan Rift Valley, which, to be clear, is going to be the 2nd in the world to have a commercial storage well, and also the 2nd to have a direct air capture deployment at scale by 2024, so that's next year. And it is crucially Kenyan engineering that is leading the way here. It is Kenyan innovation that is patented in the region that we are developing, that is developed by the young engineers who see climate change ravaging their country, right? Climate change is not foreign to the young people that are growing up on the continent today. They see it. If, like Duncan, for example, one of our founding team, you grew up on the foothills of Mount Kenya, you will have seen the glacier of Mount Kenya shrink year after year after year. as well as the drought that results from that, like affecting your community and the taps running dry, etc. It is Africa's youth has the incentive to fix it, and it is Africa's talent who can develop the technological solutions to do so. And that crucially becomes an investable opportunity. So again, we know that carbon is, a global bad, as we've heard, a global public bad. But it's also the perfect arbitrage opportunity in many ways. It doesn't really matter where in the world you take it out of the air. So naturally, you should gravitate towards where you have the best resources. And Kenya, as it happens, has the best resources for direct air capture in the world. It has the energy, the geology, and the talent to make it happen at scale. So I decided something like 2.5 years ago or so to move my life to Kenya, to start a company there to actually pursue this at scale. And it's my joy to say that we are now increasingly succeeding. We have mobilized a good amount of demand from Western finance and tech corporates, 500,000 or so thereabouts, which we're being prepaid for to actually develop these projects that can help us really scale our technology to climate relevant scales, which the IPCC says is something like 2 to 3 billion tons per year, which for a sense of scale, that's about half the global petroleum industry that we have to scale over the next few decades. It's an interesting opportunity, and crucially, direct air capture as well as geological storage doesn't just matter for carbon markets and for carbon removal. They are anchored technologies to Africa's green growth and transition. And not just Africa being a follower, but Africa being a leader, and Kenya specifically showing the world what a sustainable society looks like. Taking the lead and not just growing in a carbon negative way, but also in creating materials and hydrocarbons that are carbon neutral, manufactured from air captured carbon alongside green hydrogen, and then using those inputs as an engine for growth, not just in our region, but really creating an essential service for the world and competing globally with companies that are based out of the global north, really following in the footsteps of the innovators in solar and batteries and EVs, where we've seen the global south can take the lead. It can actually be fiercely competitive, and that is essentially what we are trying to do. It's exactly what we think African companies and economies should increasingly strive for doing. The fact that we are green is not just a nice feature of our growth, it is a red-hot competitive advantage that we should seek to leverage. It's leapfrogging not just for the benefit of development, which matters, it's leapfrogging for the benefit of competitive East African and more broadly African economies that can show the world how to build things in a green and sustainable way. We can start without the baggage of other economies, which is the way to put this.
Great, thanks, Martin. And I think you've already answered my next question, which was why Africa? But could you perhaps just say a little bit more about your investment journey? I mean, you've received some initial investments through one of our investees, Catalyst Fund, venture building and capital support. I know you've got other investment partnerships. Could you just say a little bit more about that and how those investment partnerships that you're forging are aligned with your ambitions?
Thank you so much. And yes, I will say that it is difficult building deep tech in Africa today. Frankly, most investors do not trust Africans to build the future. That is the situation, the backdrop against which we are fundraising. And it is something that we are starting to overcome. And of course, the catalytic support from Catalyst Fund, as you might say, is a key differentiator there. But beyond that, we've attracted investment from some of the leading clean tech and global direct air capture specific investors, sector investors that see what we are doing and then conclude that this has a big role to play in the global scaling of direct air capture technology. We are now raising a larger round, and of course it is difficult because we should be aware that to scale carbon businesses, and just to be clear, for direct air capture for the time being, the product is carbon removal. The product is a carbon credit. And so there is a certain market risk there, but of course, on top of that, the product is hardware, and hardware is tough to finance. And we are now actually developing the right relationships with infrastructure investors who see the future, who actually want to take bold leaps into Africa that leads in hydrogen, that leads in direct air capture, that leads in the green substances that will build the 21st century, and really want to see us as part of that. So we are in the later stages of a $6 million fundraise, and are hoping to partner with some of Africa's leading infrastructure investors there, already in the sort of later due diligence stages of that deal, but excited to really think about what the future of that will look like, and how crucially project finance and debt will have a role to play in scaling this business across the African continent.
Great, thanks. So if you've got some money in your pocket and you're interested in what Martin's talking about, please meet him in the corridor later. Back to you, James. Now with your investment hat on, Africa Climate Ventures, can you just tell us a little bit about Africa Climate Ventures, why you call yourself a broad spectrum enabler, and something about the investments that you've made, the pipeline that you're progressing, and again, whether you're seeing that there's a match between what your expectations are as ACV and what you're seeing in the market from a pipeline point of view.
So in a way, just if you listened to what Martin is doing, and it sounded like, wait, that's not what I expected to be discussing in an Africa carbon markets conversation, you've hit on exactly the challenge, which is that there's a particular suite of opportunities that I would argue is traded or maybe even over-traded with regard to Africa. They tend to have very little IP content, be almost entirely driven by nature and natural resources in one way, shape, or form or another. And because that thesis of Africa's climate opportunity is not yet widely understood, I don't think it's a question of widely believed. I think once people understand and look around, they say, well, just logically it proceeds that this is an opportunity that is there. There's a suite of companies that don't yet exist. So if you set up just waiting downstream to invest in these businesses, we felt you'll be waiting for a long time. And so what Africa Climate Ventures sets out to do is identify these theses where we believe here is an area where Africa has sustainable global comparative and competitive advantage. That if you can get to a certain critical mass on the continent, you will have tailwinds relative to the rest of your competitors around the world for the rest of the way. Tailwinds don't guarantee that you'll win. It just means that your geography is working for you, not against you. And wherever we identify one of those spaces, we either say, is there an under-recognized gem that we can climb in and help kind of figure out how they plug into this, what we believe is an emerging megatrend? Or do we believe that there's an easily addressable or a readily addressable thesis around which we can assemble a management team and actually begin from day zero to build towards a seed a broader-based seed investment and then eventually Series A? So we play in that very early stage of this game that's about populating the ecosystem with early stage, forward-leaning climate businesses that we believe have the potential to get to unicorn status, however you choose to define it, in megatons of carbon removed or in billions of dollars of valuation. With that lens, we then take some relatively early risk, but managed risk because you're starting very early, and you try and get a few of these to graduate. And we've so far made commitments, like I said, in clean cooking, in the enabling infrastructure, including hopefully one of the sites that we will attract Martin and others to, the enabling infrastructure for direct air capture. We're looking at activity in organic fertilizer and also in the technology called enhanced rock weathering that I will not talk about here, but is really, really exciting. Would love to chat about it later. And in each of these spaces, it's about being at the bleeding edge of where we think the carbon markets are going and what kind of value can be captured from them, rather than just saying we'll do something that's been done before in place X or place Y.
And can you just say a little bit about RMB Ventures? That's a partnership that you've recently forged. How's that contributing to Africa's green transition?
Well, I'll talk about them, but I was remiss in not talking about our first and actually most valued partner, which was FSD AI, who came in really early in our journey, before we were even thinking about bringing in institutional partners to allow us to kind of get to structure, get to clarity really, really quickly. In addition, one of the ways we work is we're saying there are carbon opportunities embedded in every portfolio on the continent. And so we are partnering with RMB, Rand Merchant Bank Ventures, to basically say, can we build a carbon as a service business within, you have dozens of companies in your portfolio. Your parent bank has hundreds of businesses it does business with. In each of those, there are particular opportunities, either to decarbonize and tap the carbon markets in a knowledgeable way there, or to actually build a carbon removal business of a kind, right? If you are growing seaweed to make cosmetics, well, there's a whole range of carbon applications of people who are effective at growing seaweed. But if that's not what you're doing, you can recognize it and say, well, that's not what we do. And so we are working with RMB Ventures to really look across their portfolio, identify what we see as the most promising kind of carbon add-on opportunities, bring capital and human knowledge and expertise and capital to building those businesses alongside the existing parent. And that allows you to scale up extremely fast because you're not, you're going into existing large going concerns and saying you thought you were this kind of business, you're actually this kind of business and a carbon business. So that's the goal of that, and we're hoping that's an arrangement that can be replicated either by us or by others for anyone with a large portfolio of assets, because the opportunities are really that densely scattered on the continent.
Great. Thank you, James. Thank you. I've just heard a bell. I think that means we've got 5 minutes, and so I would like to take the opportunity to ask the audience if you've got any questions for our panel. If there's any hands that go up. We've got one at the front. I don't know if we've got a microphone nearby that we can use. Yes, it's coming.
Thanks very much. My name is Clinton. I'm a carbon literacy practitioner. I have a couple of questions. I don't know whether time will really allow me. But the first question is price affected by the rigorous verification and certification within the carbon process? And then this goes to Martin, the Carbon Trade Exchange, the CTX, the most cost-effective support trading exchange. Can you share some best practices so that some investors here can be attracted as a value proposition to come and invest in Africa? And I work with Climate Hub International as a programs director, Uganda, within the 6 footprints in other countries, Sierra Leone, Ethiopia, Botswana, and then South Sudan as well. Thanks very much.
Thank you. Do you want to take the issue of price?
Yes, I'll answer the price question in 2 ways. The first one is, right now, the cost of MRV, on the cost side, is a big barrier to developing good carbon projects. We're doing it all subscale. It's a cottage industry. We're treating one of the most important activities humanity needs to mobilize on at scale as a cottage industry where every project is done bespoke with a relatively inefficient mechanism for actually proving and tracking this. Right? So firstly, that is a big cost driver today. We find our analysis suggested that less than 20%, often less than 10% of the actual value of a credit as it's sold in the global market actually gets to the people who are doing the work of whatever kind, whether protecting a forest or whatever else, because of the number of intermediaries and the inefficiency of the intermediating steps. At the same time, that work is not being done very well because the price is low, because everyone is discounting it to hell and back. And so we need to increase the quality of those processes of intermediation and verification, and we need to massively lower their cost. Both of those come with industrialization, industrializing the process, the infrastructure of the carbon markets in the places where these markets will need to exist. We should have large professional services organizations on the ground in Africa that are specialized in generating and providing that really kind of validated data on the carbon effect. And with that guarantee of quality, you should begin to see a rise in price because people know what they're buying, and you're not kind of trying to say, don't worry, I'll sell it to you really cheap. No, this is guaranteed to be, this is not going to embarrass you, pay the price you need to pay.
Great, thank you.
And just to very quickly add to the question of, again, like how do you maximize the value, especially attracting investment capital into Africa. Again, quality is a big one, and we think about that especially in terms of measurability. We measure CO2 to the milligram, actual CO2 molecules. And then the other one is durability. How long do you actually store that CO2? And both of these ways actually working on the measurability with what's often called carbon removal technologies. And then in the second step on the durability of how long does that CO2 get stored tends to maximize the value of a carbon credit in several ways. And then how do you attract investment capital into African carbon projects specifically, I do think that being able to tell a good co-benefit story matters, especially again for the part of the industry that I know best, carbon removal technologies. I think the global customers for carbon credits like the fact that Africa is taking a technological ambition to this sector and actually is leading, whereas African companies in the technological carbon removal space, and I think that definitely tends to have beneficial effects onto the revenue side as well, which can in turn then convince investors to come along. I mean, to give you an example, we as a deep climate tech company until recently had more revenue that we have booked and been paid for than we actually had investment capital again, and then that investment capital tends to follow the money. I think you might have to expect that the burden of proof on an African carbon company is higher, but as you sort of like deliver that proof in the form of revenue, investment capital follows.
Thank you. We've just got a minute left, and I would like to give the final word to our panelists. I'm just going to ask you, you're both entrepreneurs, you're both investors. What's your advice to the investment community that's looking at the carbon space in Africa, in a nutshell?
I think one important takeaway for me is that don't think that carbon is easy money or easy work. To deliver high quality, high value carbon credits does take a large amount of work and expertise, and should not be underestimated in terms of the importance of bringing that to bear. On the flip side, if you have that expertise and if you have that quality, you can expect highly outsized returns. It is a very fast growing business, and it is a very large growth sector, again, to the billions of tons by 2050.
James.
I think the thing that inspires me every day, in addition to the crisis that we need to respond to, both in terms of the African economies and the climate emergency, is we are at the beginning of the deepest, fastest, broadest industrial revolution in human history. Over the next 20 to 30 years, almost every aspect of the way that we consume or produce what we consume everywhere in the world is going to have to change. And that, that should affect how you're thinking about every investment you make. It's like knowing that you are at the beginning. If you knew how far the technology revolution was going to go in the late 90s, how would you have behaved differently back then? Now, I think it's quite clear that we are at the beginning of something even more fundamental and more broad-reaching and more fast-moving. So how does one adjust? And I think part of that, to Martin's point, this is not easy money. This is not a side-of-table exercise. This is really asking the question, across everything I am doing, how will it react to potential outcomes in how the world responds to climate and carbon? And if you have a view of that, I think it starts to push you towards thinking about investments that you otherwise wouldn't have considered, or it moves things that you are already considering higher up in your priority set. And then you need to execute with all the hard work and the rigor that Martin just talked about.
Great. Thank you very much. We are almost exactly on time, and I would like to ask you to give our panelists a very big round of applause.